Hi everyone, welcome to my channel. In the last video, we talked about the current state of the stablecoin industry and where it is heading in the future. Stablecoins are no longer just a product inside the crypto industry. They are becoming the underlying tool for future cross-border payments and international settlements. And this is an irreversible technology trend. Just like in the past few decades when we moved from cash to cards and from cards to mobile payments, the entire payment system has always been moving toward being faster, safer, and more global. So from an industry perspective, the future of stablecoins is already very clear. When the industry outlook is this clear, the next thing we need to do is simple. We need to find the companies that are truly worth investing in. Among all the companies related to stablecoins, the most central and most important one is Circle, which is the focus of today's video. Circle is a United States fintech company founded in 2013. It started out in digital payments, and in 2018, it officially entered the stablecoin space and launched USDC. From that point on, Circle's business has been almost entirely built around USDC. By 2024, Circle was officially listed on the New York Stock Exchange under the ticker CRCL. This made it the first fully public stablecoin issuer in the world. It made its revenue and financials completely transparent, and it allowed investors to clearly see how the company actually makes money. Circle's business model is actually very simple and very stable. Its core source of revenue is the interest earned on the reserves behind USDC. When a user deposits $1 to mint 1 USDC, Circle uses that dollar to buy short-term US Treasuries or place it in custodial banks. These reserve assets generate interest, and that interest is the main source of Circle's income. Put simply, as long as people use USDC on-chain, Circle can keep collecting interest. According to the latest Q3 financial report, Circle's total revenue for the quarter reached $740 million, and most of that came from the interest income on USDC reserves. More importantly, Circle runs a very light asset business, so its profit margin is extremely high. In Q3, its net profit reached $214 million, which is more than a 200% increase quarter-on-quarter, and its net margin was close to 30%. The company's operating cash flow is very healthy. It carries almost no debt, and it is a classic cash cow business. Beyond the interest income from USDC, Circle is now heavily developing its second business line, which is its network business. This will be the most important source of Circle's future growth, because the company does not want to just live off interest. It wants to build itself into a true global payment network. It is already building its own blockchain called ArcChain to handle cross-border payments and asset settlement. At the same time, it has launched CPN, a cross-border payment network that lets businesses use USDC to settle payments faster and at lower cost. Circle also offers payment APIs, wallet services, and smart account services, which allow businesses to plug blockchain payments into their own apps without needing to understand blockchain technology. In simple terms, the goal of this business line is to turn Circle from a stablecoin issuer into the next generation Visa or SWIFT. Although this part of the business is still a small share of revenue right now, its growth is very strong. According to the latest Q3 report, Circle's network business generated $79 million, which is more than 50% compared to the previous quarter and about 1/10 of total revenue. The profit margin of this segment is also rising quickly because API services, on-chain settlement, and wallet services are all software-based revenue with low costs and higher margins at scale. Even more importantly, this revenue will matter more and more over time because it does not depend on US Treasury yields. It is tied to global payment demand. As stablecoins are used more and more in cross-border payments and more businesses adopt Circle's APIs and payment network, the ceiling for this business will be very high, and it will become the core driver of Circle's future market value. From this business model, we can see that Circle is almost a sure-win business. It puts user deposits into short-term US Treasuries, which are very low risk, and it barely faces any token price volatility. Many people think Circle's profit mainly depends on the level of US Treasury yields, that it earns more when rates are high and less when rates are low, but that is not the key factor. There's only one core factor that really drives Circle's profit, and that is the usage scale of USDC. As long as USDC circulation is large enough, Circle can still earn meaningful profits even when interest rates are very low. For example, if the supply of USDC is $10 billion, then even with only a 1% treasury yield, that still generates $100 million of income per year. And it is not only the interest income, all of the network business, cross-border payments, and on-chain settlement that Circle is building also depend completely on the usage scale of USDC. The more USDC is used, the more valuable Circle's business becomes. However, anyone can issue a stablecoin on-chain. The technology itself has almost no barrier, and competition will definitely intensify over time. So what does Circle's market outlook really look like? Next, let's talk about the most important part that will decide Circle's future ceiling, its core competitive advantage. Circle's competitive moat is actually very deep. It is building a piece of global financial infrastructure. And for this type of business, the biggest barriers are not technology, they are compliance, trust, and ecosystem. In the previous video, we mentioned that the most important condition for stablecoins to scale is trust. If users do not trust your coin, no one will use it. This is actually quite interesting. Stablecoins are built on blockchain, and blockchain itself is a decentralized technology. Yet for stablecoins to be used at scale, they must move toward compliance and transparency. An issuer must actively accept regulation, undergo regular audits, disclose reserves, and place itself fully under regulatory frameworks. Otherwise, no one will dare to trust you with tens of billions of dollars. Imagine this. If tomorrow a small company you have never heard of issues a new dollar stablecoin, would you dare to buy it? Would you dare to use it for cross-border payments? Would you dare to put tens of thousands or even millions of dollars into it? Of course you would not. With stablecoins, the core is not technology, it is trust. Compliance is the most fundamental source of that trust. This is why regulatory barriers are the highest and hardest barriers to cross in this entire industry. For a stablecoin issuer, whether it is compliant directly determines how far its usage can go. An issuer that holds regulatory approvals across different countries and a small company with no licenses at all will have completely different ceilings in the future. Circle is one of the most compliant stablecoin issuers in the entire industry right now. It has already obtained regulatory licenses from multiple countries and regions, including Singapore, Hong Kong, and parts of Europe. In the future, the United States will introduce a dedicated stablecoin regulatory framework, and only 2 or 3 companies are likely to qualify for a United States license. Any issuer without proper licensing will not be able to enter the United States market or work with traditional banking systems, which means most competitors are blocked before they even start. Compliance is the hardest thing to replicate, and it is Circle's strongest competitive moat. The second moat is institutional trust. Today, across global banks, payment companies, enterprises, and exchanges, the stablecoin they prefer to integrate is USDC. Institutions are extremely sensitive to risk. They demand transparency, compliance, and safety. This kind of trust cannot be bought with money. It is built slowly through years of audits and regulatory oversight. Once established, it becomes very difficult to replace. The third moat is Circle's distribution network. USDC has already been integrated into almost all major wallets, exchanges, payment APIs, on-chain protocols, cross-chain bridges, and custodians. Stablecoins do not win through advertising. They win through network effects. When more users adopt it and more platforms integrate it, the entire ecosystem becomes harder to disrupt. You can think of USDC as the Visa of the stablecoin world. Once you plug into it, switching becomes extremely difficult. The last moat comes from ArcChain and the CPN cross-border payment network that Circle is building. Circle does not only want to issue stablecoins. It wants to create its own on-chain settlement system that allows dollars to move on-chain as efficiently as data on the internet. If this ecosystem scales first, it will be extremely hard for competitors to catch up. To sum up, Circle now has a multi-layer competitive moat that is very difficult to surpass. Its advantage does not come only from being early. It comes from years of regulatory work, institutional trust building, and deep ecosystem integration. These cannot be copied by simply saying I will also comply or I will also apply for licenses. Many licenses themselves are extremely scarce, and institutional relationships take years of track record to build. For new entrants, catching up is extremely difficult. From an industry structure perspective, the stablecoin market will likely move toward a very clear direction. It will eventually concentrate into 2 or 3 dominant players. The biggest force that will reshape the industry is the implementation of formal regulations. Although USDT still has the largest market share today, far exceeding USDC, this is mostly the result of a period with no real regulation. The United States stablecoin bill has made it clear that only issuers that meet strict compliance standards can operate in the United States. Similar regulatory frameworks will also roll out in the EU, the United Kingdom, Hong Kong, and Singapore. Once regulation is implemented, models like USDT that lack transparent reserves and complete audits will face significant pressure. It will likely be pushed into non-compliant markets and excluded from the United States and major financial systems. At that point, the stablecoin landscape could be completely reshaped in a short time. USDC, which already has deep partnerships with Visa, MasterCard, and PayPal, will naturally move to the center of the industry. From a long-term perspective, Circle has a strong chance of becoming one of the most important leaders in the stablecoin sector. Since we have confirmed Circle's investment value, the next key question is this: how much is it actually worth? For a technology-driven company like Circle, especially in an early stage, it is not easy to produce a very precise valuation. It does not have decades of historical financial data like traditional industries. Market valuation often depends more on growth potential, story, and expectations. Even though Circle has no perfect one-to-one comparable company, we can reference mature global payment infrastructure companies such as Visa, MasterCard, and PayPal. Their business models are relatively similar and their profit structures are comparable. They are already in the mature stage, so their price-to-earnings ratios provide useful benchmarks. Visa trades around a PE of 30, MasterCard around 35, and PayPal, due to slower growth, around 15. Circle's latest quarterly net profit is about $214 million. Annualized, that is roughly $850 million. If we multiply this by a reasonable PE ratio and divide it by the total number of shares, we can estimate its fair value. Using this method, we can calculate 3 scenarios. The first is a conservative estimate. If we assume a PE of only 22, which is lower than Visa and MasterCard, the fair value would be about $18.7 billion, which is roughly $81 per share. The second is a neutral estimate. If USDC continues to grow and Circle's network business expands, its valuation could reach the level of mature payment companies with a PE around 30. Under this scenario, the share price would be around $112. The third is an optimistic estimate. If cross-border payments move on-chain at scale and USDC becomes the dominant on-chain dollar, Circle's growth would be much higher. A PE of 40 or more would be possible. Under this range, the share price could reach $150 or higher. You can see that even under the most conservative scenario, the fair value is still above its current price in the $70 range. In other words, today's price already has a clear margin of safety. Based on these numbers, I will start building a position in Circle gradually. I will not buy everything at once. I will buy in stages because Circle is a typical long-term value investment. Its long-term value will depend on USDC usage and the expansion of its on-chain payment network. For me, Circle will be a long-term position in my portfolio. If you're also interested in the stablecoin industry, feel free to share your thoughts in the comments. How big do you think Circle's future potential is? Would you consider buying at this price? If this video was helpful, please remember to like and subscribe. It really means a lot to me. I will see you in the next video.